Hi, thanks for visiting the Resource Center of the website of the Arkansas Small Business and Technology Development Center. This video is going to cover an introduction to budgeting and cash forecasting. We're going to talk about controlling costs and managing your cash. So a little bit about the SBDC. We are a grant-funded organization through the University of Arkansas. All of our services are complimentary. We do small business consulting for small businesses in Northwest Arkansas. We've got branches throughout Arkansas that are affiliated with other universities, as well as throughout the rest of the country. Here's our contact information. We do one-on-one consulting, and we would love to talk with you more in depth individually about any of the topics covered in these videos. To get in touch with us, you can just go to our website and click in the top right hand corner, get a consultation, sign up, takes about 5 minutes, and we'll get in touch with you as soon as we can. And my name is Scott Lacy. I'm an ASB TDC, hard acronym to say, small business consultant. I specialize in finance and business startups, and there is my email if you'd like to get in touch. So we're going to cover, first we're going to cover budgets, the what, the why, and the how. So, just definition of a budget. It's really important to think about a budget in these terms when you're talking about small business financial management. So, a budget is a financial planning tool for prioritizing capital, or your money, your funds, your resources, and controlling your costs. So, a budget is really used, especially in small business financial management, is used for two specific things: prioritizing capital and controlling your costs. So, what do I mean by prioritizing capital? So, within your business, you've only got a certain amount of cash or funds or resources available to you, and you want to use those funds in the most efficient and effective way possible to be able to make your business succeed. But there's many different ways that you could spend those funds, and so you've got to prioritize how you're going to spend those funds on. How much on marketing, how much on new product development, how much on staff, how much on loan interest. All kinds of different things that you've got to make decisions about, and you've got to prioritize all those different needs. You might even have different product lines that you might need to prioritize. Do you want to sell one menu item or another menu item, more of? Do you want to sell one product or a different product, more of this one or more of that one? Do you want to put more resources into one division of your company or more resources into another division of your company? Recently, there's having to prioritize between in-person retail sales or online sales that gets delivered to customers. Those are two different things we've had to see businesses prioritizing their capital towards. And budgets help you do that. They help you allocate the resources that you have according to the priorities or the segments of your business that you really need to spend money on. So it's a tool for prioritizing your capital within your business. Budgeting is also used to control the costs. So you don't want to have out of control spending in any business, obviously, or any household for that matter. When you do create a budget, what that allows you to do is to go back later after the money is spent, or even while the money is being spent, and track that spending and compare it to the budget to make sure that you're not overspending, but also that as you spend more money, that you're not going to go over budget, and that you've got enough money left to spend in order to complete the project that you were assigned or the project that you prioritized. So the budget is really, for these two things, prioritizing capital and controlling costs. It's really a quick simple seven-step process that I came up with for the budget process. So the first thing you want to do when you're budgeting is you want to look back at previous spending over the last month, the last quarter, the last year. See what you've spent money on, see what was high, see what was low, see what was efficient to spend money on, what was inefficient to spend money on. Those are things we can talk about you as well if you want to get in touch for the one-on-one consulting. But you want to look back, look at the history of your business. Then you want to assess your resources and your risk. You want to see how much money you have, how much resources you have, the people that you have to be able to use those resources wisely or effectively. And you want to look at the risks associated with using those resources over the course of the next few months or the few years. Then you want to create your cash forecast, which we're going to get into in the next section. And then once you've created your cash forecast and you know about how much things have cost you previously through looking back, you know how much you have and about how much you're going to have in the future through your forecast, then you can set and you can prioritize your goals and the objectives that you want to accomplish. And then once you've set those goals, you've prioritized your goals, what you want to accomplish, what you want to invest in, you can create budget sheets that help you allocate your current and your future capital into those priorities and into those goals. Then after that, you want to track your performance. So you always want to check in every week or every month and see how much is being spent in relation to the budget that you created, to see if you're on track, under budget, over budget, underperforming or overperforming with those kinds of things. And then once you reach the end of the budget cycle, whether that's monthly or quarterly or yearly, you want to analyze those results. And if you've gone over, you need to readjust. If you have managers that you've assigned these budgets to, you want to maybe have meetings, give them some coaching, or give them some accountability so that you meet those budgets, you don't go over budget, or even reward them if they met the budget or were under budget and still succeeded with the objectives and the tasks and the goals and the priorities that you gave them. So a really easy budget process. Look back, assess your resources and your risks, create your forecasts, set goals, which is really important. You can't budget unless you set goals. Create the budget sheets, which I'm also going to show you, track performance and analyze the results and repeat. Okay, so now I'm going to show you just a really simple budget template that we have access to, that we can provide for you if you want to get in touch with us. So I know this looks really complicated, but it's actually really simple, just with a lot of really fancy colors. So as you'll see, we've got our planned expenses over here on the left, and then we've got budget by month all the way through the end of the year, with a total at the end of the year out here on the right. So the first thing this template has budgeted for is the wages that you're going to pay yourself and your employees, as well as their benefits. So we know about how much we're going to spend each month, and we can make adjustments on that, according to our business model. And then we're also budgeting for our office costs, because this company has decided that they need an office in order to manage itself well, to sell well, to take care of its employees and its customers well. And these are all of the things that go into the office that make it and allow it to operate. And then there's marketing costs that they have decided upon as well. And they have prioritized website hosting over website updates, obviously. Collateral preparation really got a high priority. And you can see all of the other items they've budgeted for, including training and travel, and then the total monthlies down here. And going all the way across, you can see everything they have. And down at the very bottom, we have what our actual are. So that's the process of tracking as you're spending. And so then we have our actual right here. So this is what was actually spent on all of the line items that were budgeted for. And then we have the difference in the planned and the actual, which is the variance or the difference. So we can see we were under budget on gas, over budget on electric. For the year is really significant. So for the office lease, looks like towards the end of the year the lease price got raised. So we see we went way over budget on our office lease, which tells us we may need to look at a different option for an office lease, or make sure our sales are going to cover that, or maybe look into financing of some sort, but taking care of that because that was way over budget. But seeing these variances is really important in your budgeting process. And then you can also do an expense analysis with some fancy charts and graphs if you'd like to. And again, we've got this spreadsheet available to you. Just get in touch with us for the one-on-one consulting, and I'll be happy to provide it for you, and we can customize it for your company as well. Okay, so back to our presentation. Cycle through here and get back to the right spot. Okay, so after the budget process, we're to our cash forecast. So what is a cash forecast? Why do we do it? And how do we do it? So a cash forecast defined. So cash forecast, like a budget, it's a financial planning tool, but unlike a budget, it's for anticipating cash inflows and cash outflows in the future to ensure that you have adequate cash available for the business in order to cover those items that you budgeted for. So it's not exactly the same as a budget. Instead, it's a forecast so that we can plan to make sure we have the cash in order to pay for those budgeted items. So the cash forecast process, we're going to look back at the history of your sales or the history of your business to see where your cash sources were from, and you can see that on the balance sheet as well as the statement of cash flows and your income statement. See where that cash was coming from. And then based on your sales, based on your financial statements that are discussed in another video, you want to estimate your future cash inflows and your cash outflows, and then analyze your cash risk. And if you're going to be short, then you may want to create a financing plan or a collection plan for any outstanding accounts receivable that you have, or any other contingency plans such as rebudgeting or reallocating capital if you're going to be short. If you're going to have excess funds, though, you won't necessarily have to create those plans. You will just focus on your budget. So then you will also track the performance to see how closely you got to your forecast. So once those sales numbers do come in, you want to compare those sales numbers for that month to your projected sales numbers, and you want to repeat that process. So a couple of quick notes, and then we're going to go back over to another template that helps you do with the cash forecasting. So it's really important to note that cash does not equal profit. A lot of people look at their income statement or their financial report very frequently to see how their business is doing, and at the bottom of that report it does show your profit, but profit does not equal cash, and cash does not equal profit. If you look at your bank balances, if you look at your balance sheet, if you look at your statement of cash flows, the numbers for your cash there do not always equal, and rarely do equal, the profit or your bottom line profit on your profit and loss of your income statement. So don't manage your business solely through your income statement. Also need to make a note about cash versus accrual accounting. This is going to make a difference on your cash forecasting when you're looking at your financial reports in QuickBooks or other financial reporting software that you have. So cash accounting is accounting that records revenue or records sales or records cash when the cash is actually received, when it's actually in your hands, or when it's actually in the bank account. So for instance, if you make a sale, you don't record that sale until the customer has actually given you the money for that sale. Or if you take out a loan, you don't actually record the money in your business until the bank has actually transferred that money to you, and you've got it actually in hand. Accrual accounting only records revenue, only records sales when that sale is actually made. So for instance, if you make a sale, that sale is going to be recorded immediately. You're not going to wait for the cash to come in. So for instance, if you tell a customer, hey, you can pay me in 30 days, but you're on an accrual accounting, you're going to record that sale in your accounting software the day the sale was made, not when you receive the cash in 30 days. Hope that makes sense. It's a little confusing, I know, but it's simple once we talk about it. And again, if you'd like to get in touch, feel free to go to our website and sign up for consulting, and we'd love to talk to you one-on-one. Some quick causes of cash shortages for companies. A lot of times companies will make a sale, but the money won't be owed to them or due to be paid to them for 30 or 60 or 90 days sometimes. Wedding venues, for instance, they'll make a sale, but the wedding couple isn't due to necessarily pay them the full amount until up to 6 months before the wedding or 45 days before the wedding. And if the wedding venue isn't planning for those cash inflows to come later on in the year, then when bills come due before that cash comes in, you could possibly not have enough money to pay your bills. So that's the primary cause of a cash shortage. All right, so let me go over to the template for the cash forecasting. So it looks a little bit similar to a budget, but it's not quite the same. Budget is more for prioritization and allocation of capital. Cash flow is more about where's the money coming in from and where's the money going to go out from. So as we can see, similar to budget, we've got it done by month over here. The beginning of the year cash flow would go here. The beginning of the period that you're doing the projections for would go here. Excuse me, my eyes itching a little bit. And then you just do your projected sales, projected returns or collections, and when they're going to be collected. If you're loaning anybody money, when that money's coming in. So all of your inflows would go here, and then your cash outflows would all go here. In this section, it's just cash out, actual cash out, and then you've got your net cash out, and then your net cash inflow or outflow projected for the month. And that's going to help you know whether or not you're going to be able to pay your bills, because you're going to take this your net cash, and you're going to combine it with your balances on hand and your balance sheet, and you're going to get your cash on hand at the end of the month. And that's going to help you know if you're going to have enough money to pay your bills at the end of the month. Real simple. Again, you'll have access to this. Just get in touch with us and we will get it to you for sure. Okay, let's get back to our presentation. Sorry, it always goes back to the beginning. Okay, so some quick differences between budgeting and cash forecasting, just to review. So both are primary financial tools used in business but are not official documents like the 3 financial statements. So in every business, there are 3 required financial statements for every business to have. It's the balance sheet, the income statement, and the statement of cash flows. And we talk about that in another video in the resource section of our website. Those are required to have. You've got to have those pretty much anytime you want to take out a loan or do any kind of financing, or even sometimes reporting to the IRS, depending on your business size, or in order to be able to compare your business to the industry standards of other businesses. Those are the 3 standard documents that everybody wants to have. But the budgeting and cash forecasting documents are almost as important as those other 3 documents. They're just not required. But they are documents that you want to have developed and you want to be looking at and referring to weekly or monthly. Definitely no less than quarterly. But they are primary financial tools used in a business. So budgeting, the budgeting worksheet is used for prioritization of capital and controlling your costs. So making sure that you're spending money in the places where it's going to give you the biggest bang for your buck, and also making sure that when you're spending according to your budgets, that you're controlling your costs according to your budget and nobody's going over budget, so that you're spending yourself out of business. Cash forecasting is for planning in order to ensure cash needs are met for budget items in the future, to make financing decisions moving forward. So it's a forecasting thing. You want to plan to see how much cash you're going to have coming in and going out, to make sure that you have enough cash to meet all of your budget needs. So just a quick overview. We really appreciate your time. Thank you so much for checking out the Resource Center. Again, if you want one-on-one consulting, you can go to our website, click on the top right-hand corner and get a consultation, and we'll get in touch with you really soon. Again, here's our contact information with our phone number and our website. Thank you guys so much. Have a great day.